This started as a scam, but no one recognized it at the time. People were buying documents that claimed ownership of valuable opportunities, and money was exchanged for assets that did not exist. Those papers promised rights, returns, or guaranteed value, and investors believed they were securing something real. More people joined after seeing others invest, and the system began to grow without producing anything tangible. Money continued to move from one person to another, and each transaction made the structure appear legitimate. No one stopped to verify what those documents actually represented, because everything looked formal and convincing. The more people participated, the stronger the belief became, and doubt slowly disappeared. By the time questions started to surface, the system had already taken everything. This was a scam built on documents that never represented anything real. This began in the early 20th century, when documents started being treated as proof of ownership, and people trusted written agreements without verification. A group of individuals created documents claiming rights over valuable assets, and those claims were presented as legitimate opportunities to investors. These papers showed ownership of land, access to resources, or guaranteed returns, and people believed they were entering a structured system. The documents looked formal and convincing, carrying signatures and markings that appeared official, and no one questioned their authenticity. People gathered around tables reviewing these papers, and money was exchanged based purely on what was written. No one physically checked whether the assets described actually existed, and the document itself became the only proof they relied on. As more individuals purchased these claims, the system began to expand, and each new participant reinforced the belief. The same documents were shared, copied, and redistributed across groups, and every version told the same story of value waiting to be claimed. Investors committed more money over time, believing they were securing something that would grow in value, and the structure appeared consistent. Everything looked controlled on the surface, but beneath that structure there was no real asset backing any of it. The entire system depended on trust in the documents, and belief replaced the need for verification completely. And as more people accepted those documents as truth, the foundation of the scam became stronger. As these documents began circulating, they created the appearance of opportunity, and people started to believe that valuable assets were being distributed. Early investors reviewed the papers and committed money, believing they were gaining access to land, rights, or guaranteed returns. The structure looked organized and consistent, and each transaction reinforced the idea that the system was legitimate. Those who entered early began sharing the same documents with others, and their participation made the opportunity seem trustworthy. More people gathered around these deals, and they observed others investing without hesitation. The movement of money itself became a signal of credibility, and no one questioned what was actually being verified. Promoters continued presenting these documents as limited opportunities, and urgency pushed people to act quickly. Investors feared missing out on what appeared to be a valuable system, and they committed more money without deeper checks. Each new participant strengthened the illusion, and the system expanded without producing anything real. The same promises were repeated across different groups, and every version told the same story of guaranteed value. As more people entered, the scale of the operation increased, and the system began to sustain itself through belief alone. And by the time anyone considered questioning it, the opportunity already felt too established to doubt. By this point, the system did not depend on real assets, and the documents themselves had become the product people were buying. Promoters presented these papers as proof of ownership or guaranteed returns, and investors treated them as verified agreements. Each document referenced land, rights, or opportunities that could not be easily checked, and that gap removed the need for immediate verification. Money was collected up front based on these claims, and no part of the system required physical confirmation of value. The same documents were reused across different transactions, and each sale created the illusion that something real existed behind them. Investors saw others holding similar papers, and that shared belief reinforced the idea that everything was legitimate. No central authority verified the claims, and the structure relied entirely on trust between participants. As long as money continued to circulate, the system appeared functional, and no one questioned what was actually being delivered. New versions of the same documents were introduced with slight changes, and they were presented as new opportunities to incoming participants. Each layer of participation added more credibility, and the absence of proof became harder to notice. The system did not produce anything tangible, and yet it continued to operate through repeated transactions. And the deeper people invested into those documents, the less likely they were to question what they had actually bought. As more people entered the system, the volume of transactions increased, and the movement of money created the appearance of real activity. Groups gathered around the same documents, and each new exchange reinforced the belief that the system was working. Crowds formed around these opportunities, and individuals began trusting what others were doing rather than what was being proven. The same documents were passed through multiple hands, and repeated transactions made them appear more valuable over time. Temporary networks formed between participants, and information spread quickly without any verification. Traders and intermediaries began positioning themselves within the system, and they benefited from the growing flow of money. The scale of participation created pressure, and people felt compelled to act before missing the opportunity. More money entered the system from new participants, and earlier participants appeared to validate the process. The structure expanded beyond small groups, and entire networks formed around the same underlying claims. The presence of activity replaced the need for proof, and movement itself became the only signal people relied on. As the system grew larger, it became more difficult for individuals to step back and question what was happening, and the expansion itself became the reason people believed the system was real. At first, the system continued without interruption, and the steady transactions made everything appear stable. But some participants began noticing that nothing tangible was ever delivered, and the same documents kept circulating without change. A few investors started comparing their claims, and they realized that multiple people held rights to the same assets. The documents began to lose their clarity, and inconsistencies started appearing across different versions. Some individuals returned to verify what they had purchased, and they found no evidence of the assets described in the papers. Questions began to surface within smaller groups, and uncertainty started replacing confidence. Despite these doubts, new participants continued entering the system, and the overall structure remained active. Those who had already invested struggled to step away, and their commitment kept them tied to the process. Investors started asking for proof of value or returns, and no one was able to provide clear answers. The gap between promise and reality became harder to ignore, and the structure began to show visible strain. More people noticed the same pattern repeating, and the idea of legitimacy slowly began to break down. And as doubt spread through the system, the first real cracks became impossible to ignore. The collapse did not happen instantly, and the system began to slow as more participants stopped trusting the documents. Transactions started to decline, and fewer people were willing to exchange money for claims that could not be verified. Investors attempted to recover their funds, and they quickly realized there was nothing backing the agreements they had purchased. The same documents that once carried value became meaningless, and no one was willing to accept them in new transactions. Participants began leaving the system, and the networks that once sustained activity started to break apart. Intermediaries and promoters withdrew from the process, and the structure lost the flow of money that had kept it active. Those who remained were left holding documents that no longer had any perceived value, and the illusion collapsed completely. Attempts to enforce the claims failed because there was no real asset behind any of the agreements. The absence of proof became undeniable, and the system could no longer maintain its appearance of legitimacy. Money stopped moving entirely, and the structure that once appeared stable came to a halt. What had been accepted as opportunity was revealed as nothing more than a constructed belief. And in the end, the system collapsed because there was never anything real to support it. What collapsed was not just a single scheme, and it was a system built entirely on belief rather than verification. The documents were never valuable on their own, and the only value they carried came from what people believed they represented. Participants did not invest in real assets, and they invested in the idea that those assets existed somewhere within the system. The structure worked because individuals trusted what others were doing, and that shared belief replaced the need for proof. As more people joined, participation itself became validation, and the absence of evidence became less visible over time. No authority confirmed the claims, and yet the system continued to operate as if everything had already been verified. Those who entered early reinforced the illusion, and those who entered later sustained it without questioning the foundation. By the time doubt appeared, the scale of participation had already made the system feel real to everyone involved. This pattern is not limited to one moment, and it appears whenever belief replaces verification in any structure. Whenever participation becomes proof, systems like this can expand without producing anything real. The mechanism does not depend on the asset itself. It depends entirely on how people respond to the promise. And every time it begins the same way, with something that appears real but never needed to be.